Hello. Today we're doing an update on STRONGBLOCK. Now, STRONGBLOCK is the protocol that gave me financial independence, that allowed me to walk away from my job and start pursuing DeFi full-time. I owe so much to STRONGBLOCK. So I would like you to know that, because I want you to know that I am heavily biased towards STRONGBLOCK, though I'm going to attempt to be as objective as possible. The first major calculator I made was a strong calculator. The first dollar I made on a calculator was a STRONGBLOCK Pro calculator. The majority of my calculator money came from my STRONGBLOCK tax estimator. So clearly I have a bias towards Strong. That said, we're going to look at the metrics today. So some of the new things that have happened with STRONGBLOCK recently are that they started the Polygon nodes. Now, in the Q&As or the AMAs that David Moss has weekly on Telegram, it was discovered that Polygon gave a grant of like $15,000, roughly $15,000 worth of Polygon to STRONGBLOCK for this node program. So that's really not a sustainable amount of money or a sustainable grant to give to STRONGBLOCK in order for STRONGBLOCK to reward users for running Polygon nodes. It's just sort of like a thank you, and we're gonna have to continue the same sort of protocol, which is Strong is committed to create the node, and then the node pays you out in Strong, because there's just not enough Polygon from a $15,000 investment to give you any meaningful amount of Polygon if a bunch of people want to create nodes, right? If 15 people create nodes, just 15 people, and you give them each $1,000 of Polygon in a month, right? Or even a year, that's the 100% of the Polygon has been used up from 15 people. So it's not like the greatest grant ever. I can't access any of these because, truth be told, I sold my NFT a long time ago, which was not the best investment move because the value of the NFTs went up way more than I had expected. But as soon as I found out that you would not need an NFT to continue Ethereum nodes, I sold my NFTs for just the liquid cash to create more nodes at that point in time, and that was a while ago. So I haven't bought NFT since, though I am interested. I'm interested in the up and coming Phantom nodes because apparently Phantom gave them a much larger grant, though I don't think that number is public, and I wonder why. I wonder why David was willing to say what Polygon gave them, but not willing to say what Phantom gave them. Maybe he was willing to say how little Polygon gave, and he's not willing to say how much Phantom gave. I hope that's the case. Hope that's the dynamic. Like, he wants people to know that Polygon, as much as, you know, we love their chain, this is all they offered us. Whereas with Phantom, we're not going to tell you, but you'll be excited. Hopefully. I mean, that's just a bullish narrative. Not binded to any particular facts or truth that I know of. So, you know, take that with a grain of salt. Anyways, if you have NFTs, you know, you can start making nodes. Word on the street is that Polygon nodes are offering slightly higher daily rewards. I cannot personally confirm this, but I have talked to people on the Twitterverse who have said that their two nodes, back, like looking at them next to one another, they noticed that their Polygon nodes are generating more Strong per day. So take that for what it's worth. Everything is still the same with them. Like the way you set them up and the rewards you're getting. It's going to be, you're setting them up with Strong, you're getting rewards in Strong. However, moving forward, you may be able to, instead of creating one node with 10 Strong, you may be able to create a 10th of a node with 1 Strong and things like that, and get a 10th of the rewards, or maybe slightly less than a 10th. That way, you know, you're more incentivized to create a full node, but anyone can access smaller nodes, and people who do that are taking less of the pool. It's, you know, whatever mechanism they want to employ. All right, so that's pretty much it for the major updates that are actually happening, except for mining. So Ethereum 2.0, you can finally stake your Strong and get Ethereum rewards. And I think this is probably the most bullish thing that's happened for Strong in a long time, because 50% ROI, or 50% APR on Ethereum, like getting paid in Ethereum on Strong. Yeah, that's great. Now, in my dream scenario, like in the most bullish narrative, what this does is this creates even more scarcity for Strong and drives the price up. So people, instead of selling and dumping their Strong every Sunday, they're now taking their Strong and just staking it here to get those Ethereum rewards. However, if that happens consistently, the Ethereum rewards are going to go down. Truth be told, I'm not sure how they're currently able to offer this much Ethereum as rewards, but hey, I'm not going to fight it, because in terms of the protocol's mathematics and mathematical promises, they have not broken any promises to me as an investor yet. I've always gotten my rewards as advertised, so I've always been happy. So if they're saying 50% and they're paying me in ETH, I'm going to believe that, and there is a non-zero chance that I am going to be staking my next claim here, which I think is good for the protocol. If this continues to happen, that people are claiming and then staking it here, that's going to be very good for the health of the protocol, because it takes Strong off the market, so less supply, more demand. And it also creates another incentive for people to go out and maybe this will bring in new investment. People will see this and say, hey, Strong is maybe not the most stable investment, but Strong has been a decent investment over time. Maybe I'll buy some of that Strong and stake it for a bunch of Ethereum. Maybe, who knows? Who knows if that narrative will arise in the space. But it's a pretty good one. There's also the Strong pool that's been around for a while, and these two pools have been around for a while, ranging between 54 and 86% APR. All right, now we're going to look at the metrics, the Dune analytics, the ones made by Mr. Irish CTO. Phenomenal guy off of Twitter. The query took too long. If I refresh these, the queries should load. I am most interested in the chart on the bottom, so I don't really mind that these haven't loaded. I'm going to go down here. So the Strong rewards pool, just to remind you guys, is composed of the 4 wallets that interact with one another to collect the Strong from new nodes and to distribute the Strong as rewards. So I think these 4 wallets in their totality sort of compose the total rewards pools. So you can consider like the total volume here as like all of the Strong available for rewards at any given time. And what's been happening sort of consistently since the beginning of November is that we see sort of like weekly rises because no one's really selling during the week because of Ethereum gas fees, and then a big dump during the weekend, and a weekly rise, and a big dump during the weekend, and a little bit of a rise, and a dump during the weekend, and a dump. So this is not the greatest pattern. I'm not gonna sugarcoat it. I am hoping that the Ethereum 2.0 pool incentivizes people to, instead of dump every Sunday or dump every weekend, to stake and collect Ethereum. But of course, I'm a man of taking profits. I completely respect people who are dumping their Strong every weekend, right? Take your profits. Investors owe no responsibility to any protocol to, continue staking until they're at a loss, or to continue staking for the health of the protocol. Now, maybe there's some game theory in there, some prisoner dilemma stuff, but in general, like, investors' job is to create money for their family, for themselves, for whomever, in hopefully in an ethical way. And an ethical way is you've created nodes, you were getting paid to do that, reward to do that. You're more than welcome to and allowed to, and you should take those rewards and turn them into profit. So my hope is that people will see that Ethereum 2.0 pool as being better than cashing out into USDC or USDT or whatever else it is, or Ethereum, and start utilizing that, which will again reduce the supply, which will increase the price, hopefully and theoretically, but we'll see, right? So I'm looking to see if this trend, right, we're going up now, I'm looking to see if we continue on this trend. I think we must have had like a low gas day around there, but basically, you know, up, low gas day, psh, up, low gas day, psh. So I'm looking to see if we're going to see any difference in this trend here. It's a bummer that the other things don't load right now, but I guess we can look at the new/reinvestment ratio. So reinvested is actually on the up since the price has gone down, which is sort of, I guess, kind of makes sense. People aren't necessarily looking to take profits on the assumption that the price is going to go up in the future. So they're sort of betting on a bullish future, which I like. That's a sort of a good indicator of internal narratives. And then you can look at new signups. So, you know, we sort of kind of leveled off late October until November. We saw a dip during early November, and we're sort of back up. So, you know, take that for what it's worth. It's just data. It's there to consume. Reinvestment ratio is slowly going down, it's declining. So people are more and more taking profit and less reinvesting. However, if you look again, sort of similar to this, we're seeing, if you took this and made a line, I don't know if I can just take a quick screenshot. Nope, can't take a screenshot when I'm doing a video. Okay, fine. But if you look here, you see we have a positive slope or sort of positive correlation or whatever you want to say from like this time to here. So that means more people since October have been reinvesting their node rewards back into strong nodes. So that could be a good sign. Who knows? In finality, we are definitely seeing a reduction in total rewards. However, now that we have some new protocol options, like the Ethereum 2.0 pool, we might see more people taking their strong off the market and parking it into these pools, which should theoretically drive up price, but not necessarily, because there are other factors aside from just supply that may affect the price. So I like this. I'm excited about this. Of course, you know, as more people stake, I imagine this APR is going to go down, as you know, so it goes. And that's about it. So hopefully I was as objective as I could be in terms of these surrounding narratives. Biggest, most major points are Polygon nodes are now live. Potentially they have slightly better rewards than the Ethereum nodes. I don't know if that's due to the depreciation model that I thought was up and coming and not yet implemented. So I'm going to keep that assumption that it hasn't yet been implemented and we're still sort of working on that model. So there's that. You have to have an NFT to access those. So I imagine that once news gets out or it's confirmed that Polygon nodes are indeed slightly higher yield, I imagine the value of the NFTs will increase. So, you know, keep that in mind. There are now finally some strong forks, which, you know, is kind of flattering for strong. You have Ring and you have Katana, and I think that it is yet to be known or yet to be determined how successful those will be. Ring is clearly doing pretty well right now. I think it's because people understood that if they got in early on strong, that they would be the people who benefit the most from all of the new investment coming in, both in terms of price appreciation and in terms of the rewards. So I think that narrative is sort of driving Ring more than any other fundamentals or tokenomics or actual investments from the Ring that they're receiving. And last thing I'll say, final thing I'll say, some people have asked, like, hey man, nodes don't, like validator nodes and nodes in general, aren't super lucrative. Like their APYs range from like 2% to 15%, depending on which network you're running nodes for. So Strong is offering crazy APRs, like 300 and something %, right? How can they do that, right? Isn't it terrible or disingenuous that they're offering these super high APRs when they're creating nodes that either offer no APR or like negligible APR up to 15% maybe? And my answer is that was the whole point of this protocol. The point of this protocol was to find a way to incentivize bootstrapping nodes onto blockchains to get those blockchains secure and give them data integrity with nodes that would validate transactions. and STRONGBLOCK has successfully done that. They've created a bunch of nodes for the Ethereum blockchain, like a really large number of nodes for the Ethereum blockchain. They've created a bunch of nodes for Sentinel. They've created a bunch of nodes for Polygon. They're going to create a bunch of nodes for Phantom and hopefully other blockchains. And that's really good because those nodes have been created and those nodes help with DeFi in general. And so I actually appreciate what STRONGBLOCK is doing, and I don't think that had they only given you rewards from the validators, there would have been no need for the STRONGBLOCK protocol. The need in the DeFi space for STRONGBLOCK was that incentives weren't high enough. So STRONGBLOCK kind of acted like a farm, right? When you're farming pools, when you're farming on swaps, what you're getting is the pool fees plus farm rewards. And farm rewards in general are just these hyperinflationary tokens that are tossed on top of fee rewards in order to incentivize farming and incentivize providing liquidity. Similarly, except without the inflationary aspect, Strong is just incentivizing node running additionally to the yield of the actual node. So I think that's a totally DeFi thing to do, and I think that it's been great for DeFi in general in terms of getting nodes set up for various blockchains. If you want access to my videos before the general public, you can join my Patreon because I have a folder that's sort of public there with all the videos that go into my Google Drive to sort of be edited and chapterized and thumbnailed by my video manager guy who's fantastic. So, you know, early access, all that kind of stuff, watch it before anyone else if you want to, is there. We also, you know, you can ask me questions and I'll answer within 24 to 48 hours. So that's sort of the benefits of the Patreon if you want to join. Link in the description. Otherwise, stay strong and have a wonderful rest of your day.